Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Welltower Inc., a leading real estate investment trust REIT that focuses on healthcare infrastructure, including senior housing, post-acute care, and outpatient medical facilities. Welltower plays a crucial role in shaping the future of healthcare real estate. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Welltower has been a major player in the healthcare real estate industry for years. From a behavioral finance perspective, how do biases like the availability heuristic and loss aversion influence their decision-making, especially in areas like investment strategy and property management?
The availability heuristic is particularly relevant to Welltower's approach, especially in how they assess and communicate the importance of healthcare real estate investments. The availability heuristic refers to the tendency to judge the likelihood of events based on how easily examples come to mind. Welltower leverages this bias by highlighting the growing demand for senior housing and healthcare facilities, especially as the global population ages. By emphasizing the increasing need for these services, Welltower makes the case for the continued growth and stability of its investments in healthcare real estate. Loss aversion, another key behavioral finance concept, also plays a significant role in how Welltower approaches its investment strategy. Loss aversion refers to the preference for avoiding losses rather than acquiring equivalent gains. In the context of real estate, Welltower's investment decisions are focused on minimizing risks associated with market volatility and economic downturns. Welltower achieves this by diversifying its portfolio across various types of healthcare properties and geographic locations, ensuring that the company can withstand fluctuations in specific markets or sectors. This conservative approach appeals to investors who are risk-averse and prefer stable, long-term returns over potentially higher but riskier gains.
And this focus on leveraging the availability heuristic and loss aversion has helped Welltower maintain its leadership position in the healthcare real estate industry, appealing to both investors looking for stability and those interested in the growing healthcare market.
Exactly. Welltower's strategic use of the availability heuristic in highlighting the growing demand for healthcare facilities and loss aversion in managing its investments appeals to investors looking for a company that balances risk management with growth opportunities. However, this approach also means that Welltower must carefully manage the risks associated with changes in healthcare regulations, demographic shifts, and economic conditions, particularly as the healthcare industry continues to evolve with new challenges and opportunities.
Let's talk about diversity, equity, and inclusion at Welltower. As a major player in the healthcare real estate industry, DEI is particularly important for Welltower. How does this intersect with behavioral finance?
Welltower's approach to DEI is crucial, especially as the company operates in a global and highly regulated industry where inclusivity can drive better decision-making, innovation, and employee engagement. From a behavioral finance perspective, strong DEI initiatives can enhance Welltower's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows Welltower to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the healthcare real estate industry. For investors, Welltower's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Welltower build stronger relationships with employees, healthcare providers, and communities, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in industries like healthcare real estate, where the ability to foster inclusivity and innovation is critical to long-term success.
That's right. By embedding DEI into their corporate culture and operational strategies, Welltower not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to market adaptation, Welltower operates in a highly regulated and demand-driven industry. How does the company adapt to changing market conditions and healthcare trends, and what role does behavioral finance play in this?
Welltower's strategy involves continuously adapting its property portfolio, investment strategies, and tenant relationships to meet the evolving needs of the healthcare industry while maintaining its focus on stability and long-term growth. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with market volatility, regulatory changes, and shifting healthcare demands. Welltower's ability to understand and respond to new market trends such as the increasing demand for outpatient care, the shift towards value-based care, and the growing importance of senior housing allows it to stay relevant and competitive. By using data analytics, tenant feedback, and market research, Welltower can identify emerging opportunities and adjust its strategies accordingly, helping to mitigate risks and capitalize on new opportunities in the healthcare real estate sector.
And this adaptability is essential for Welltower, especially as they face competition from other healthcare REITs and the growing demand for more specialized and integrated healthcare facilities. Their ability to maintain their brand's relevance and leadership in a changing industry is key to their continued success.
Exactly. Welltower's focus on understanding market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the healthcare real estate industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in healthcare regulations, demographic shifts, and competitive pressures.
Now, let's compare Welltower to other companies in the healthcare real estate and REIT sectors like Ventas, Healthpeak Properties, and HCP Inc. How do the behavioral finance dynamics differ?
Welltower's dynamics are often compared to other healthcare REITs like Ventas, Healthpeak Properties, and HCP Inc., particularly in their approach to investment strategy, portfolio management, and competition. Welltower's strength lies in its focus on healthcare real estate diversification and long-term stability, appealing to investors looking for a company that balances operational reliability with market leadership. Ventas, with its emphasis on senior housing and medical office buildings, appeals to investors interested in a company that prioritizes demographic-driven growth. Healthpeak Properties, known for its leadership in life science and medical office properties, attracts those looking for a company that is driving advancements in healthcare infrastructure and tenant relationships. HCP Inc., with its focus on a diversified portfolio of healthcare properties, appeals to investors interested in companies that integrate strategic investments with operational excellence. Welltower's behavioral finance dynamics are shaped by its reputation for stability, strong market presence, and adaptability, making it an attractive option for those seeking stability and growth in the healthcare real estate sector.
And unlike Healthpeak Properties, which focuses heavily on life science and medical office properties, Welltower's strength lies in its specialization in senior housing and post-acute care, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Welltower, the focus on healthcare infrastructure, tenant relationships, and market adaptability provides a unique value proposition in the healthcare real estate industry.
To sum up, Welltower Inc.'s approach to business is deeply influenced by behavioral finance principles, whether it's through their investment strategies, adaptation to changing market conditions, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Welltower's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.